Ladies and gentlemen, good day and welcome to IIFL Capital Services Limited Q3 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone. Please note that this conference is being recorded. I now hand the conference over to Mr. R. Venkatraman. Thank you, and over to you,
Thank you and good afternoon, friends. Welcome to the Q3 FY26 analyst call of IIFL Capital. I am joined in this call with Ronak Gandhi, who is our CFO. Despite a challenging global environment, the Indian economy has remained resilient, demonstrating growth with historically low inflation, improving labor market indicators, and strengthening external and financial buffers. Coordinated fiscal, monetary, and structural policies have reinforced macroeconomic stability while supporting investment and consumption. The Trump tariff deal and a fiscally prudent budget with capex focus ensure stable macroeconomic environment with a positive bias. The RBI has also raised its real GDP growth projection to 7.4%, signaling confidence in the durability of domestic demand. However, global trade uncertainties and commodities and financial market volatility may cloud the external outlook. Coming to our results, consolidated operational revenues for the quarter stood at 586 crores, virtually flat on a quarter-on-quarter and a year-on-year basis. Coming to details on a quarter-on-quarter basis, retail broking income was 288 crores this quarter versus 271 crores in Q2 FY26, which is up 6%, mostly on line of increased volumes. Institutional and investment banking revenues had decreased 14% to 160 crores, which was 186 crores in the previous quarter. The financial products distribution income was up by 3%, 134 crores versus 130 crores. Now coming to the expenses, we have seen an increase in the employee cost to 175 crores in this quarter from 154 crores in the previous quarter due to variable pay provisioning and a one-time charge of rupees 7 crores due to changes in labor laws. Depreciation increased by 13% on account of investment in branches. Fees and commission expenses increased by 10% due to higher payouts, which is now standing at 130 crores. Admin expense was up 5% to 91 crores. Operational profit before tax was 119 crores, down 27% on a quarter-on-quarter basis, primarily account of increase of expenses. Other income was 135 crores, and this includes a gain of almost 90 crores on sale of real estate property held in IIFL facilities and also mark-to-market gains on BSE shares. Coming to year-on-year basis, retail equities volume was 288 crores this quarter versus 299 crores in the Q3 FY25, which is down 3%. Institutional and investment banking revenues decreased 6%, 160 crores this quarter versus 171 crores in Q3 FY25. FPD income, financial products distribution income was 134 crores versus 107 crores, up 25% because of increased focus on distribution income. Again, we have seen an increase in employee cost. Employee cost increased 17% to 175 crores this quarter versus almost 150 crores in Q3 FY25 because of increase in headcount also, apart from the variable pay provisions which I spoke about earlier and the 7 crore hit. Depreciation increased 21% to 17 crores from 14 crores due to setup of new branches and investments in technology. Fees and commissions increased 10% to 130 crores because of higher payouts. Admin expense stood at 91 crores, almost 30% increase because of increase in technology and branding and marketing costs. Operational PBT was 119 crores before the mark-to-market, which is down almost 35% on year-on-year basis, as I mentioned again, because of increased expenses. Coming to some housekeeping numbers, average daily turnover this quarter was 3,14,660 crores, which was futures and options of 3,11,976 crores and a cash of 2,685 crores. which was in the previous quarter 2,63,568 crores. F&O was 2,60,956 crores, and cash was 2,612 crores, which is up 19%. And the same was 2,78,267 in Q3 FY25. F&O was 2,75,520 crores, and cash was 2,747 crores. Now there are other inputs, other updates I want to share with you. First and foremost, there have been media reports regarding some investments in the company. We constantly explore strategic and other opportunities to enhance shareholder value. If and when there is a development that requires any disclosure of SEBI's LODR regulations, we will make it. Coming to income tax matters, the Income Tax Department, as you are aware of, had conducted a search under Section 132 in January 2025. In the course of the proceedings, various matters examined in the holding company and the subsidiaries. We have fully cooperated with the department by furnishing all requisite information and evidences as sought from time to time. As a prudential measure and without prejudice to our rights and contentions, on a consolidated basis, we have paid an ad hoc taxes of 27 crores approximately, and this has been accounted for this quarter as tax expense, tax adjustment for prior years. The post-search assessment proceedings are currently in progress, and we continue to extend full cooperation. That as of now, there is no order demand notice at this point, and hence potential impact at this point is not ascertainable. We believe, after considering all available facts and records, that there is no material adverse effect on the financial position of the group, and no material adjustments are required to be made to the financial statements. With this, I come to the end of my talk, and we are open to handle any questions that you may have.
Thank you very much, sir. We will now begin with a question and answer session. Anyone who wishes to ask questions may please press star and one on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and one to ask questions. The first question is from the line of Keshav Kanwa from White Pine Investments. Please go ahead.
Sir, hi sir. Thank you for the opportunity. How many RNs did you add this quarter? And also my second question is that when do you think wealth management business will break even and become profitable? Yeah.
Okay, to answer your second question first, we believe that we are continuing to invest in the wealth management practice, and I hope that at this point in time we are loss making, but by next year we should be closer to break even. Second thing is about the RM. If you see, we have two channels, basically wealth as well as the private client group or the existing RM base. So effectively we have lost some RMs in the existing PCG or the existing broking space, and we have added marginally, because I think we have added about 2-3 RMs this quarter in the wealth space. And as I mentioned in the earlier call, this space is becoming increasingly competitive, and recruitment I think everybody is facing recruitment challenges, and hence we are going slow in the way we are recruiting. So as we speak right now, we have about 470 RMs on a combined wealth and the old private client group.
My question was that by year end, like in FY26, by year end, how many RMs do you see to add?
I think we'll be adding maybe another 10-15 RMs. Beyond that, I don't think that will happen in the next 2 months.
Okay, sir. Thank you.
A reminder to all the participants that you may please press star and one to ask questions. The next question is from the line of Aditya Bhatia from Electron Capital. Please go ahead.
Yeah, thank you for the opportunity. Just a question regarding the distribution assets. For the last 9 months, I've been seeing that the mix is increasing towards our TBR rather than the ARR, which we would expect towards wealth management. So just if your comments on that, that'd be really helpful.
No, actually, if you see that mix between TBR and ARR has been broadly in the 60/40 range. And I think last quarter we have seen some increase in the fixed deposit, fixed income space because of increased allocation of fixed income like NCDs. So we would hope that in the going ahead also we'll be in the 60/40 range or maybe 65/35. I think last quarter we have seen some increase in TBR assets simply because of more NCDs and fixed income allocation.
Okay, understood. So 65/35 going forward.
60/40, 65/35. 60/40, I think it's better if you take as 60/40.
Okay, 60/40. Okay. Secondly, if you can give me the split between the IE and IB income.
See, basically last quarter, roughly, I think, Insti was 100 crores, no? Last year? Yes. The broking was about 100 crores in the 160 crores.
Okay, understood. Okay. And yeah, I was wondering also if you can tell me what is the yield that we're making on broking income for institution as well as retail?
So I think the broking yields is like on the institutional business. I don't have this data upfront. Hello, I don't have this data upfront, so maybe I'll contact you offline and share that.
Sure. Okay. That's all from my end. Thank you. Thank you so much.
Thank you.
You may please press star and one to ask questions at this time.
Overall.
Participants who wishes to ask questions may please press star and one now.
Overall.
A reminder
If
to
there are
all
no more questions, I want to thank the participants, and Ronak and I are available to answer any questions you have. So you can connect offline also to discuss the same.
Thank you, members of the management. Ladies and gentlemen, on behalf of IIFL Capital Services Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.